What's going on, guys? My name is Andrew and this is Broke Man Finance. In today's video, I'm covering some recent news or updates concerning AT&T and overall how it may impact the stock moving forward into 2021. If you've watched any of my prior videos on AT&T, then you already know that I overall like them. But I also do recognize they have some issues concerning them, and mainly that is their debt. So let's cover the most recent news first. Just this past week, sadly, a bomb went off in Nashville, Tennessee, and while the matter is still under investigation, what we do know, it was somewhat a negative incident for AT&T. It was reported in their local news that AT&T suffered a major outage in the Nashville area as a result of the bomb. Customers then took to social media and really started expressing their anger about the outage. Now, I do recognize I am not in those customers' shoes and I didn't experience this outage. However, I do think that most people understand that this isn't a result of bad management, customer service, or technical support. I mean, no company really, especially a communications company like AT&T or even T-Mobile or Verizon, can really anticipate a bomb going off in one of their areas and affecting their capabilities. So overall, I really don't think this isolated incident really affects the stock. However, I did want to mention it because it does bring a little bit of negative news to AT&T, at least concerning the customers in that area. But before I transition and talk about the recent good news that AT&T has that could actually benefit the stock and us as investors, let's go ahead and briefly discuss the main issue or concern that investors have with AT&T, and that's the overall debt problem. Now, one of the things that investors have been concerned about for the past couple years is AT&T's overall debt problem. At one point, I believe it was around $200 billion in overall debt, which is a major concern to us as investors and really to anyone if you're looking at analyzing and evaluating this company. This has been one of the main reasons why the stock has remained relatively cheap and really hasn't seen much movement positive in the past several years. Overall, for a 10-year period, of course, the stock has seen its ups and downs. We saw it peak around $40 a share to right now it's in the high 20s, where it's resulted in overall that 1% decrease if we're looking at a 10-year period. Although the company has reported to have over $17 billion in cash on hand, it is burdened with that crazy $168 roughly billion in current and long-term debt. However, the good news for me, at least as an investor, the past few years, AT&T has been pretty aggressive with knocking down this debt. This summer alone, they announced an early debt repayment that equal to around $5 billion. And of course, we looked at during the summer, AT&T looked to sell off Warner Brothers gaming unit for roughly around $4 billion. But of course, since the deal has been tabled, and then a few weeks ago, AT&T agreed to sell off Crunchyroll to Sony Entertainment for roughly $1 billion. Now, when we're talking about this overall debt problem, AT&T really started seeing a lot of this debt when they started acquiring companies the past couple of years. And unfortunately for AT&T, DirecTV was one of those acquisitions. While at the time it probably was a good business transaction for AT&T, but since then, everyone and their brother now has a streaming service or a streaming product. And once the streaming devices have really hit the economy the past couple of years, everyone and their brother seems to be dropping cable and satellite subscriptions. Unfortunately for AT&T, DirecTV is losing customers at an alarming rate and really is probably not even a profitable company. So while we're looking at the Warner Brothers gaming unit and the Crunchyroll, it is good that AT&T is looking to sell off and kind of bring in an influx of cash. Although small in comparisons, these billions of dollars to the overall billions they have in short and long-term debt, it is a positive step in the right direction for the company. But let's change directions a little bit and really focus on the good news or the positive news about AT&T as we move into 2021 that really may help your opinion as an investor, as a potential investor of this company. One of the first positive news or signs of positive direction for the company is they are continuing to expand and provide their 5G capabilities to different cities across the United States. And the most recent news was Tampa, Florida, where customers can now have access to that blazing fast download speeds. And then with more positive news, earlier this month, the FBI, or the Federal Bureau of Investigation, announced it was expanding its use of FirstNet and agreed to a $92 million commitment with AT&T. As of September 30th of this year, there were more than 14,000 public safety agencies and organizations across the country, representing more than 1.7 FirstNet connections. So if you're not aware, FirstNet is a program that AT&T provides to public safety organizations and individuals that provide them with a more dedicated service in the event of emergency or a natural disaster. So the next thing is some really good news for me as an investor and you if you're already an investor or shareholder of AT&T, and that is their lucrative dividend payout. Now, for many years now, AT&T has been labeled as really a dividend aristocrat or royalty when we're talking about companies that pay out dividends. Yes, they have this debt problem, but fortunately, even in 2020, with all the lockdowns and the COVID-19 issues, they have not cut their dividend. And just recently, they announced they're going to pay out yet again a decent dividend. According to the article I listed, AT&T announced recently that the dividend payout was going to be again 52 cents a share with a payable date of February 1st and an ex-dividend date of January 11th. As an investor, there is a pro and con about this photo. The payout ratio is somewhat concerning for me at over 65%, but the dividend growth of 60 years straight is a positive. I typically like my stocks to pay out dividends to have a ratio lower than 50%. So when we're talking about dividend payout ratio, I'll kind of give you a basic example. If you have $100 and you pay out $50, then you still have $50 to spend your money, invest your money, pay down debt, whatever you want. So the closer you get to that 100% payout, the less money you have. And this is the same example with companies. Again, there is more math and more in-depth explanations to that. That kind of gives you a basic explanation of why I like that payout ratio to be around 50% or lower. Again, the higher to that 100%, that means the less money the company has to pay down its debt, to improve or expand their services. So looking ahead to 2021, it all comes down to one thing for me as an investor, and that's the Q4 earnings report before I decide to buy any more shares of AT&T. One of the biggest topics I'm looking for in this Q4 earnings report is how many subscribers did they add to HBO Max from Q3 to Q4. The success of HBO Max really has been labeled by some analysts as AT&T's Achilles heel, meaning if they're going to continue to be successful, they have to improve and expand their HBO Max subscriptions and their service. But with some major movies such as Wonder Woman 84 that was released back on Christmas Day, and upcoming movies in 2021 like Godzilla vs. King Kong, which my son is excited about, and the new Matrix movie, that could be a major hit or boost for the company. HBO Max and AT&T, in my opinion, is at least sitting in a decent position to help grow the brand and their service. Overall, my position, like I mentioned before, is a hold. I'm really looking at that Q4 earnings report to look at debt numbers, revenue growth, HBO Max subscribers to kind of see what direction I will move as an investor. Of course, this is my personal opinion on this stock. This is my investment strategy. If you have any questions, this may not fit with your investment strategy. Do your own research, consult with a financial advisor on whether or not this stock benefits you in your investment portfolio. Although I can understand for a stock that's less than $30 a share and a dividend payout over 7% yield, this is a interesting and an attractive stock to put to your portfolio. But with the year that we've had in 2020 and looking ahead to 2021, the debt concern at AT&T is a major concern. I need to see really substantiated or major steps on addressing this debt and paying off, other than selling a gaming unit for $4 billion when you have an overall debt problem of $168 to $200 billion. Let me know in the comments section what you think about AT&T. Are you against the stock? Are you for the stock? Or if you're like me, you're holding the stock until you see some positive or negative movement, whichever way. As always, thanks for watching the video. Stay safe, and we'll see you on the next video.